Bitcoin just suffered its biggest sell-off since the FTX crash, hitting a low of 59,000. Bitcoin has fallen. Somebody please help it up! Down 53% off the all-time high, methodically just dropping like it knows something you and I don't, and has decided not to tell us. I'm not gonna act like it didn't suck, because it did. But this audience doesn't fall for that. Those other disgusting troglodytes who don't watch this show, they're crying in their safe spaces as we speak, and I hope they cry harder. We know at the end of the day there's always something bigger happening behind the scenes. The real reason is hiding in plain sight, but it may not be what you think. This Friday, the biggest IPO in history of the stock market opens for trading. Not Amazon, not Google, not Saudi Aramco, a rocket company. A rocket company that is being valued at 1.75 trillion on day one. Trillion with a T. And I just need you to think about that for a second. Because Apple took 40 years to get to 1.75 trillion. SpaceX will have that likely by Friday morning. Now look, I like rockets. Rockets are cool. I watched the Falcon Heavy landing and I cried a little bit. I'm not ashamed of that. But I'm also an adult who has read an S1 filing. And what's in these particular S1 filings is, absolutely unhinged. And nobody asked the obvious question during Bitcoin's face down. What does Bitcoin know? Big show today. We got 3 stories. First, why Bitcoin's 50% drop might be the most important signal in the market right now, and it has nothing to do with Bitcoin. 2, why the SpaceX IPO, which opens Friday morning, is the most legally sophisticated wealth transfer Wall Street has pulled off in decades. Your index fund is in this whether you want it to be or not. And 3, I'm going to tell you something about OpenAI and Anthropic that made me spit out my chicken tendies last night. I do not waste precious tendies. Because while we were watching SpaceX load up the launch pad, they quietly filed for their own IPOs, 3 in 2 weeks in sequence, and nobody on CNBC is connecting the dots. Welcome back, I'm Rustin. Let's get into it. Bitcoin seems to be on life support. Things aren't great, but history doesn't repeat, it rhymes. And right now, it's rhyming with 2000 and the dot-com crash. But before we jump into price IPOs and conspiracy theories that will be true in 6 months, we need to lay some groundwork. Okay, you've heard of the term risk curve, right? Of course you have. You watch this channel, this show, but for the new people, let me give you an example. Here's the short version. On one end, safe, boring bonds, treasuries, things that don't move. On the other end, volatile, high return, things that can 10x you or take your legs. And at the very, very far end of that spectrum, the most sensitive point on the whole curve, Bitcoin, 75% annualized volatility. It's the most exposed instrument in the global financial system, not because it's broken, because it's honest. It moves when real money moves. Now, smart institutional money, the guys with the spreadsheets and the fleece vests, they go as far out on that curve as they need to, right? If I can get a 12% return somewhere safer, I'm not going to take Bitcoin level risk for a 12% return. I'll take the sure thing. And for the last couple of years, AI stocks were giving people Bitcoin tier returns at like half the risk. Nvidia at 52% volatility, still wild, but way less wild than Bitcoin. So what happened? Money went there instead. Left Bitcoin, went one step back towards safety and got the same return. That's not manipulation, that is math. But here's what's wild. Bitcoin felt the liquidity drain before anything else did because it's the most exposed. You don't feel an earthquake in the middle of a stable slab. You feel it first at the fault line edges. Bitcoin peaked October 2025. 3 cycles in a row within weeks of global liquidity peaking. Bitcoin turns first every time, 126K to 63K, while the S&P ripped, while AI went vertical, while everyone on CNBC was throwing confetti about the Goldilocks economy. Bitcoin wasn't crashing. Bitcoin was reading a memo nobody else had yet. All right, SpaceX, let's just walk you through what is actually happening Thursday night, because I think a lot of people hear the word IPO and eyes glaze. They have 2017 flashbacks and they change the channel before they have a panic attack. Stay with me. An IPO, initial public offering, means a private company is selling pieces of itself to the public for the first time. SpaceX has been private this whole time. Elon owned it. His early investors owned it. Regular people couldn't buy in. Thursday night, that changes. Here's how it works. Thursday evening, a room full of bankers and SpaceX executives sit down and decide, what's one share of SpaceX worth? They look at demand from big institutional buyers, hedge funds, pension funds, sovereign wealth funds, and they land on a number. That number is the IPO price. For SpaceX, that number is $135 a share. That's what the big guys pay. Friday morning, the stock opens on NASDAQ under the ticker SPCX. That's the four-letter abbreviation like how Apple is AAPL. And now you can buy it. Regular people at whatever price the market opens at, which could be 135, could be 180, could be 200 if everyone rushes in at once. Now the valuation, this is the part I need you to sit with. SpaceX is selling roughly 4% of the company in this IPO, and they've priced that 4% at about 75 billion. So, if 4% of SpaceX equals 75 billion, what does 100% of SpaceX equal? 1.75 trillion. That's what they're saying the whole company is worth. $1.75 trillion more than the GDP of most countries on Earth. More than every company in Canada and Australia combined. More than Apple was worth in 2020. For a rocket company that, I want to be very precise here, is not profitable. Cool, I'm sure. That's fine. Moving on, now you'd think, okay, whatever. FANG companies weren't profitable early either. That's a venture play. I get it, except here's what's different. The lockup. Normally, when a company IPOs, the early investors, the people who got in at 50 cents, they can't sell. 6 months, sometimes a year. The idea being, if you just raise 75 billion from the public, you should probably let the stock stabilize before you dump on the people who bought it. Common courtesy. There are actual laws. SpaceX said, what if we did less of that? The early investors can sell 20% of their holdings starting after Q2 earnings. That's mid-July at the earliest, possibly September. And if the stock goes up 30% from IPO price, they can sell another 10%. So the better the stock does for retail, the faster insiders can get out. The incentive structure is completely backwards, allegedly. They still have 5 to 10 weeks post-IPO, not 6 months. The SEC has a rule for a reason. SpaceX found the smallest door in the room and walked straight through it. Now the S&P 500 said no, SpaceX isn't profitable, doesn't qualify for fast-track index entry, rules and more rules. And NASDAQ goes, wait, we have rules too, but also hold on, and changes their rules. New fast entry framework. SpaceX can be in the NASDAQ 100 within 15 trading days. Now, why does that matter? Because your index fund has to buy it automatically. Your 401k doesn't get a vote. The index adds SpaceX. The fund buys SpaceX. Retail becomes the exit liquidity. You signed up for this when you opened a Fidelity account and clicked Diversified Portfolio. Oh, and there's one more thing. SpaceX's actual float, the shares that are actually trading publicly, is about 4% of their total valuation. So NASDAQ invented something called a float multiplier. They will mathematically pretend SpaceX has 2 to 3 times as many public shares as it actually has. So that passive index funds are required to buy more than they should, by design. Filed. Wall Street analysts are already flagging that U.S. leveraged ETF assets just hit a record 175 billion, piled into semis and NASDAQ products. When those fund managers start rebalancing to buy SpaceX, something else has to sell first. Figure out what that is. Elon himself locked up for a full year. He's not cashing out, but the people who backed him when he was sleeping on the factory floor 5 to 10 weeks, gone. And look, SpaceX at least makes real things. The rockets work. Starlink works. It's great. It goes fast And it doesn't involve a Comcast technician showing up to not fix it. Respect. But here's what is happening. While SpaceX is loading the launch pad for Friday, OpenAI quietly filed a confidential S1 with the SEC. No price, no date, no ticker, just we exist, we want your money, details to follow. OpenAI is currently valued at 852 billion cut bucks for a company that in Q3 of 2025, one quarter, lost 11.5 billion. Not for the year, one quarter. The lemonade stand brought in $4,000 in the first half of the year and then spent 11.5 billion on one Wednesday. And we're valuing this at 852 billion because, I don't know, because the chat bot writes decent cover letters? And then there's Anthropic, filed their confidential S1 9 days ago, June 1st, standard SEC procedure. You file, you raise debt. Institutional lenders do due diligence, look at the books that describe what the company is actually worth. Here's what confidential filing actually means in plain English. The public doesn't see the numbers. The SEC sees them. The underwriters see them, and the lenders trying to decide whether to give them 8.6 billion bucks sees them under NDA, behind closed doors, with very serious men in very serious suits doing very serious math. That math? Not public, which means retail is buying the story before the story has a number to attach to it. SpaceX goes Friday. OpenAI just filed. Anthropic filed just a week ago. Three of the biggest companies in the world in sequence in 2 weeks. The machine needs to keep moving. And there's always another face. Okay, before you throw your dog out the window, look, real yields are still positive, about 2%. That's a genuine headwind for Bitcoin. Money doesn't need to sprint back out of the risk curve right now. There's a return available closer to safety. That could persist into Q3, Q4. Could get messier before it gets better. The 4-year cycle says the down year is 2026, and history is not on our side if we're expecting a V-shaped recovery. Also, if the AI thing deflates slowly, like .com did over 18 months, Bitcoin's timeline extends. Not canceled, delayed. And everyone on Twitter will call it dead approximately 400 more times. Here's the other side. Bitcoin has survived 50% plus drawdowns every single cycle. 2011, 2014, 2018, 2022. They called it dead every time, and every time, new all-time highs put down that bottle. And the macro math is actually pretty simple. The US government's interest payments are now the second largest line item in the federal budget, bigger than Medicaid, growing. The Congressional Budget Office has it going parabolic. There is exactly one way that resolves. Rates eventually have to come down. Real yields go negative. Inflation runs, and every dollar sitting in a safe bond starts bleeding to inflation and has to move. When it does, where does it go? Back out on the risk curve, all the way to the edge. Speaking of people trying to quietly restructure where your money goes without asking, the answer to all of that is the same thing. Not your keys, not your Bitcoin. Let me tell you about one of our partners, the Bitcoin Way. Our friends at the Bitcoin Way do this for a living. Hardware wallet, your own node, full on-chain verification. They walk you through every step until you mastered it. Plus, privacy phones, Plan B residency, the whole sovereignty stack. Schedule your free 30-minute consultation today by scanning that QR on screen or click the link in the description. Do it today, not next week, today. And here's the dirty secret about every other Bitcoin-backed lender. They're lending your collateral out. They're rehypothecating it. They're playing the same fractional reserve game the banks play with your Bitcoin. And when the music stops, your stack is gone. Ledn doesn't do that. Their custodied loan product means your Bitcoin sits in cold storage. Never lent out, never touched. That's the Satoshi standard. 8 years, $10 billion in origination, zero customer Bitcoin lost. Lowest rates in the industry, no hidden fees, no fine print, auto top up so you never get liquidated by a wick. Zero prepayment penalties, paid off whenever you want. Don't sell your Bitcoin to buy a house, a car, a business. Borrow against it. Keep your stack. Scan the QR or click the link in the description and head over to ledn.io today. Okay, so let me tell you what I actually think is happening. The fiat Ponzi, the one running since 1971, the infinite debt machine, the petrodollar system that requires a constant expansion to not collapse. It always needs a new face, a new story, a new thing to sell retail, the people that makes the insiders liquid before anyone finds out the numbers don't work. In 2000, the face was .coms, companies with no revenue, no path to revenue, astronomical valuations. It all sounds familiar. And an exit window that closed in about 18 months. In 2007, the face was mortgage-backed securities, bundles of loans that nobody fully understood, rated AAA by people who were paid to rate them AAA, sold to pension funds and retirees who had no idea what they owned. Today, the face is AI and rockets and trillion-dollar valuations on companies that lose $11 billion a quarter with confidential S1 filings stacked up like planes waiting to land at LaGuardia. And the live act opens Friday morning. The S&P 500 is roughly 45% AI adjacent at this point. Semis are 30% of the NASDAQ. And the CAPE ratio, the measure of how expensive the market is versus historical earnings, is sitting at 42.32. For reference, the .com peak was around 44. We're parked in a lawn chair directly next to it. And the insiders, they know. They filed the early lockup release. They engineered the float multiplier. They got the rules changed at NASDAQ. The SpaceX IPO is not a space story. It's a liquidity exit, the most sophisticated one I think I may have seen in my lifetime so far. And it opens Friday. Here's what I keep coming back to. The Ponzi needed one more act. It got one. 3 of them. Actually, in 2 weeks in sequence. And Bitcoin, 3 cycles in a row, told you something was off before anyone else did. Oh, and if you're serious about Bitcoin mining, there's one event you need to be at this summer. Mining Disrupt 2026, Miami, July 21st through the 23rd. This is the conference for miners, hardware makers, energy companies, and anyone building real Bitcoin infrastructure. Keynotes, panels, massive expo floor. The deals that shape this industry happen here. Use promo code SimplyBitcoin for 20% off your tickets at miningdisrupt.com, and we'll see you in Miami. Hey, that's what I got today. Hope you guys enjoyed it. Bitcoin's reading a room that Wall Street is still decorating. Stay humble, stack sats, don't sell your Bitcoin to Larry Fink. Smash that like, hit subscribe, give us a pamp, and let us know what you think down below in the comments. Love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.